What if I told you they're SA, company trading under $20, right? Now that S quietly building one of the most essential infrastructures for the AI revolution, and most retail investors haven't even noticed it yet, while everyone's chasing the big names in artificial intelligence, this undervalued layer is providing the critical backbone that makes modern AI possible. It's not flashy, it's not trending on social media, but it's deeply embedded in a sector that's expected to grow exponentially over the next decade. And here's the thing that makes this particularly interesting right now. This business has recently secured partnerships that could multiply its reach across some of the fastest-growing markets in the world. If you're looking for an AI-related opportunity that doesn't require you to break the bank, you're going to want to hear what this company is actually doing behind the scenes. So let's talk about what kind of business we're actually looking at here. This isn't one of those pure-play AI software companies that everyone's talking about. Instead, this company operates in the data center and digital infrastructure space, which is essentially the physical foundation that allows AI, cloud computing, and digital transformation to exist at scale. Think of it this way. Every time an AI model processes information, every time a company stores data in the cloud, every time a streaming service delivers content to millions of users simultaneously, there's a massive infrastructure requirement behind it. This company builds, owns, and operates the facilities that house all of that computing power. They're essentially the landlords of the digital age, providing the mission-critical real estate where servers, networking equipment, and cooling systems come together to power our increasingly digital world. What makes this business model particularly attractive from an investment standpoint is the recurring revenue structure. This company doesn't just sell a product once and hope for the best. Instead, they lease space in their data centers to enterprise clients on long-term contracts, often spanning multiple years. These clients range from hyperscale cloud providers to telecommunications companies to large enterprises that need secure, reliable infrastructure for their digital operations. And here's where it gets interesting for AI investors specifically, as artificial intelligence workloads become more demanding. They require increasingly sophisticated infrastructure with higher power density, advanced cooling systems, and ultra-reliable connectivity. This company has been strategically positioning itself to meet exactly these requirements, investing heavily in next-generation facilities designed specifically for AI and high-performance computing workloads. Now, let's talk about trust and credibility, because in the infrastructure business, that's everything. You can't just show up and convince a Fortune 500 company or a major cloud provider to entrust their critical operations to your facilities overnight. This particular company has spent years building a reputation for reliability, security, and operational excellence. They've consistently demonstrated their ability to deliver uptime levels that enterprise clients demand, often exceeding industry standards. The business has also been methodical about obtaining the necessary certifications and compliance standards that major clients require, whether that's related to data security, environmental standards, or industry-specific regulations. This track record of reliability has allowed them to not just attract clients, but to retain them and expand relationships over time. When a client trusts you with their infrastructure, switching costs are high and relationships tend to be sticky, which creates a beautiful moat for this type of business. In terms of physical presence and scale, this company operates across multiple strategic locations. With a particular focus on markets where demand for digital infrastructure is surging, they've established facilities in key metropolitan areas and emerging markets. Where cloud adoption and digital transformation are accelerating rapidly, we're talking about a footprint that spans several countries. Strategically positioned to serve both established markets and high-growth regions, the company has been expanding aggressively, not just through organic growth but also through strategic acquisitions that have allowed them to enter new markets and add capabilities quickly. This expansion strategy has been well received by the market, as each new facility or acquisition represents additional capacity to capture the growing demand for data center services. About the public response to their growth initiatives has been increasingly positive, especially as investors begin to understand the critical role that digital infrastructure plays in enabling technologies like AI, machine learning, and advanced data analytics. So what exactly does this company provide, and why should you care as a potential investor? At its core, they offer co-location services, which means they provide the physical space, power, cooling, and connectivity that companies need to operate their IT infrastructure. But it's not just about renting space in a building. These are highly engineered environments designed to maintain optimal conditions for sensitive computing equipment with redundant power systems, sophisticated cooling technology, and multiple layers of physical and digital security. For clients deploying AI workloads, this company offers specialized solutions that can handle the intense power requirements and heat generation that come with training and running. They also provide interconnection services, which allow clients to directly connect with cloud providers, networks, and other businesses within the same facility, creating a digital ecosystem that enhances performance and reduces latency. This interconnection capability is becoming increasingly valuable as companies adopt multi-cloud strategies and need seamless connectivity across different platforms and providers. Recent developments around this company have been particularly noteworthy and suggest that momentum is building. There have been significant announcements regarding capacity expansions in high-growth markets, indicating that management sees robust demand ahead and is positioning the company to capture it. The business has also been forming strategic partnerships with technology providers and hyperscale clients, which not only validates their infrastructure quality, but also secures long-term revenue streams. There has been increasing investor attention on the data center sector overall, as the AI boom has made it clear that infrastructure will be a major bottleneck and opportunity. This company has been actively communicating its AI readiness to the market, highlighting its technical capabilities and available capacity for AI workloads. Additionally, there have been positive analyst notes and industry reports positioning this type of infrastructure play as a more stable way to gain exposure to AI growth compared to the volatility seen in some pure-play AI software stocks. The financial results have been showing healthy growth trends, with improving occupancy rates and strong customer retention metrics that suggest the business model is working and demand is real. From a future growth perspective and long-term investment outlook, the fundamental drivers here are extremely compelling. The global data center market is projected to grow at a compound annual growth rate in the double digits over the next several years, driven primarily by cloud adoption, AI deployment, edge computing, and 5G rollout. This company is positioned right in the middle of these megatrends as enterprises continue their digital transformation journeys. As AI becomes embedded in more applications and workflows, as data generation continues to explode, the demand for reliable, scalable infrastructure will only intensify. What is particularly attractive about this business model from a long-term perspective is the combination of growth potential with relative stability. Unlike some speculative AI plays where it's unclear if revenue models will materialize, this company generates real cash flow from real contracts with real customers today. The growth opportunity comes from expanding capacity, entering new markets, and capturing an increasing share of infrastructure spending as digital transformation accelerates. There's also potential for margin expansion as the company scales and achieves operational efficiencies. For patient investors who understand that building infrastructure takes time but creates durable competitive advantages, this could represent a compelling way to participate in the AI revolution without taking on the extreme volatility associated with earlier stage technology companies. The company we've been discussing today is Digital Realty Trust. This is a real estate investment trust that owns, acquires, develops, and operates data centers globally, providing essential infrastructure for the digital economy and increasingly for AI workloads. At a price point under $20 per share, it offers accessibility for retail investors who want exposure to the critical infrastructure layer of the AI stack without needing to invest in high-priced mega-cap technology stocks. As with any investment, it's crucial to do your own research, understand the business model, consider your personal financial situation and risk tolerance, and think long-term. The data center space is competitive, and while the growth prospects are strong, there are always execution risks, market risks, and factors beyond any single company's control. Stay informed, stay disciplined, and remember that building wealth in the stock market is a marathon, not a sprint.